Hello, hello, hello. Happy Tuesday. How's everyone doing today? Good morning, PMG. Good morning, Sterling. Thank you for putting in the news. I did not see that. Meta plans to charge $14 a month for ad-free Instagram or Facebook. You don't get both. So if you want ad-free Instagram and Facebook, you got to pay $28 a month? Or is it 14 for both? What am I Again, I'm still not paying for. How are people on Social Security going to afford $14 a month to browse their Facebook? Does anybody use it? I don't know who uses Facebook, but I don't know. What else do we have? Good morning, Patrick. So really, Piper Sandler maintained its overweight rating and the $450 target for Tesla. I'd like to see the breakdown of that price target. Oh boy. Good morning, Anissa. Good morning, Daniel. We had Drew have I know you're putting in some earnings. You put in Redbook. Do you have some earnings? Do you have KB Homes? That was a disaster yesterday. Their earnings. Rumble was a misbeat. Lots of other minor stuff. Good morning, David. Good morning, Harold. Really like this system. Where do I find updated podcasts to learn more? Well, you tune in. You'll learn stuff. I mean, sometimes I teach more stuff. The best way to do is to tune in. You get lots of free stuff taught. Tune in to the monthly Futures Edge, which next one is live. They're now live. Next one is April 1st, so that's another way. And then just keep tuning in and ask questions. Good morning, Heinrich. I should probably just put together some overview videos again. It just takes so much time. Let's see. Mike, MKC, remind me to look at MKC. Wondering percent beat buy, could not find what day. Oh, when did I talk about percent beat buy? It was in the last couple. I know it wasn't the live one, so it was the one before this last one. So what was the last one? March? So it would have to probably be February. Good morning, Ted. Good morning, Tony. Hello, Charles. All right. Alrighty. Just trying to do this to help people learn some markets and a consistent approach. You don't have to adopt things the way I do, but I hope you see as I have a consistent approach day in and day out. And we analyze both sides of the market, and you're not always going to be right, period. So if you're always looking for if you're looking for anything I need to be right 100% of the time, it does not exist. Things can come out of left field, even stuff. I trade some stuff that I don't teach here. It's a little too complex, but it's in the mid 80s. That's still going to be wrong. But mid 80s is very powerful. But again, things come out of left field and blindside you. It's just the nature of the markets. Don't expect perfection. Manage risk, manage reward to risk, and know your probabilities. There you go. KBH was a miss. A pretty big miss on revenue also. When am I going to go back to doing 2 shows a day? If I'm going to do that, I'm probably going to make the second one a subscription one, just because it takes a lot of time to do this, actually. It's not just sit down in the chair 5 minutes before it starts and, a lot of it's my prep anyways, but it just takes time then to make sure all the technology works, that you don't have issues. It takes more time than you think. So KBH is gapping down. All right. Thank you again. Thank you everyone for being here. Thank you for everyone who's tuning in. We'll have to see. Now it's somewhat easier that I'm out in Arizona because again the afternoon show could be, if I did one again, could be around early afternoon for me. But I do not like getting up at 4 a.m. Getting up at 4 a.m. I love Arizona. I just don't like 4 a.m. All right, but I chose to live here, so can't complain about it. We had Kugler speaking, saying that they can also go. Do you have any excerpts from Kugler's speech, Sterling? I know he said that they could hold rates longer. I think that's what he said. I don't have his exact quote. Redbook bouncing to 5.6. Home price year over year. Actual coming in 4.7 versus 4.5. Expected consensus was 4.8 though. Month over month, just 0.2. Again, housing needs to correct, and that's coming from a person who recently bought a house, got a good deal on it. But I'm expecting my value of my home to drop too. It's tough to find rentals with 4 dogs. Williams is coming up speaking consumer confidence. We'll see that at 10 a.m. Eastern Daylight Time, so 30 minutes after the cash open. We got some new home sales. We got Richmond Fed. That's not really going to move the markets. Consumer confidence is minor. What else do we have? That's it. So far, we have Tesla, which really led the charge yesterday on that snapback rally, triggering the double. I'm expecting it to continue a little longer to run. Also, we're in quarterly rebalancing, which based off the patterns and based off option expiration, we could get some still more upward bias going into the end of the month. That doesn't mean every day has to be up. You got mega caps that are decent. Only NVIDIA's off. So that's it. Groups. We have comm services, energy, basic materials, financials leading. Really, the only things negative are real estate and consumer defensive. So still, it's got a strong, at least a strong upward bias. Now, Fed watch. We have a pause still in May, a cut in June. Did this change after Kugler said anything? Probably not, but I'm just checking it. Cut in June, and then a cut in September, and then no cut in December. So back to 2 cuts now. Fear and greed finally out of extreme fear. Finally out of extreme fear. The breadth is bouncing a bit, which is not surprising, especially going into quarter end. Schiller PE almost back to 36. Again, everybody who thinks this is going to the moon, can it bounce more? Oh, definitely. But anybody who thinks this is going to the moon, we have to really change some stuff around. What else do you have here? Let's see. What did I see current Fed policy is still 6 judges. The policy is well positioned. What else? What else? I'm just looking at the comments that Sterling put in. Is estimated the 12-month PCE was 2.5 in February. Huh, I didn't see that one. All right. All right, thank you for putting those in. In terms of earnings, we already talked about KB, and Sterling put some other things in. I missed McCormick. GameStop this afternoon. Again, there's nothing really that's going to be market moving. Tomorrow, I would keep an eye on Dollar Tree, just for lower end consumer and what Dollar Tree has to say about that. So here's our patterns. This is why I like to trade patterns instead of what I think the market should do based off of news and economics. I like to trade the patterns. Remember, this was triggered back on the 17th, went sideways through OpEx, and now has launched itself. First target, second target hit, and also yesterday closing above the rotation zone. So I'm technically in neutral mode on the daily. All right. Neutral mode on the daily, still on the weekly. We could easily rally back to the major breakdown zone and the thing that triggered the double and then roll over again. So we can still be bearish on the weekly and neutral to slightly bullish on the daily. 58.68 targets. I'm giving you the targets I'm using, then 58.90. And then if it continues, about 59.15. Those are the exact targets I am looking at to the upside. Now, every day does not have to be bullish. I'm keeping an eye, though. Today, I'm watching this 4-hour rotation zone. The top of it is 5,800 to 5,805 on any pullback or sideways movement. That's where it is. See, it moved sideways overnight and now is breaking back up to the upside. Major is back at the bottom of the 4-hour rotation zone and the prior breakout level, back at about 57.60. So those are the 2 support levels, and anywhere in there, if we did pull back, I'd be watching for rotation back up patterns. So I hope that makes sense, and those are the upside and the pullback targets I am using, but I have to err on the side, even though we're getting overbought, that we could still have some more upside potential on this snapback rally. NASDAQ, first target hit. So this would be a raise stop, at least at a bare minimum. for the double bottom. Come on, give me my, there we go. Now the invalidation point at this point is right around, it would have to close all the way back, well, let's just call it 19,750. 19,750, so that's a long way off. You have a lot of support there. We'll look at support first for the NASDAQ. Again, 4-hour rotation zone, 20,300. If we drop below there, I'm looking at about 20,150 to 20,100 in that area. So those are the two key major areas. If we pull back in the rotation zone, I'll be watching for rotation back up patterns. Next target's the upside. 20,482, 20,645 roughly. How does that look on the daily? Yesterday closed right at the flat top of the rotation zone. If we blow through this final target, the next key area, the next really magnet area is back to 20,950. 20,900 to 20,950. Not yet overbought yet. The Dow. I'm really watching how this reacts between the 200 and the 50. Okay, and if we're looking at our retracements from this last little push down, if I can click the right thing. Oh boy. Oh boy. It's going to be one of those clicky click days. If we look at this, here's your major cluster, 43,320. That's a very key cluster right between those. So that's what I'm looking to the upside. Shorter term targets, I'm going to get 43,125. And then just beyond that, about 43,430. On a pullback, same thing. 4-hour rotation zone. You see how that's lining up really nice with the prior breakout areas at the bottom and this little support ledge at the top. Russell, still barely hanging on to the potential double. It'll probably be off the table, and I doubt it's going to trigger in the next couple of days, so it'll probably be off the table. Russell keeps running. The next key target area is 2,160, 2,159 to 2,160, and then about 2,180. Oops, you want your pullback levels again. 4-hour rotation zone. But here, the strongest support is at 2112, 2113. Pay attention, though. If Russell comes up and can't exceed yesterday's high, it's going to make probably a little mini double top pattern. I would be keeping an eye on that if it does form. VIX continuing to drop. Again, look at all the fear coming out of the market right now. Everything coming out. So as long as we don't really start rebounding above 18, watching for a rally, choppy to upside rally. The DAX. DAX did trigger a mini double 4-hour double bottom. So going to be watching. Key support now for me is this 23,281. Targets on that mini double are 23,550, 23,630 roughly. And then to the recent highs. The invalidation point at this point, what would invalidate that pattern would be a close below 23,118 or a trade below 23,061 intraday. So that's a little mini pattern on the DAX. The notes, remember I'm keeping an eye if this rolls back up. This is going to be interesting inverse head and shoulders. This is not triggered yet, so that I just have those levels on to remind me. But this is starting to pull back into very key support at this 110.07. It's going to be interesting to see if we break back below that. And the yields are starting to break out to the upside just a bit. We have a clear path move up here, so I'm paying attention, especially if we get above the 50 EMA, to 4.42, then 4.48 to the upside. If it can sustain above this, it's got to sustain today above this prior key resistance. It's got to sustain today above this prior key resistance area. If it turns around, closes back in there, it will look like a false breakout to me. Dollar index, yesterday triggering the double against the rotation zone, today pulling back. Key area I'm watching for it to hold is above 103.50. Crude, also officially triggering double, and the first target has hit. So it's a tricky one to trade. You had to trade it intraday to base off of it. But the key stop level on this one at this point, the key level on this one, the invalidation point is all the way back at 66.76. I would not recommend riding it. If you are long crude, I'd have a stop ahead of that level, because if this breaks back down, you don't want to see it below 68. But that's the official rules. You can put the stop wherever you want. It just matters with reward to risk and how it modifies your probabilities. Next target is roughly 70.30. Gold, still watching now, getting cycles to the bottom, watching for a rotation buy up. Okay, we've pulled back to rotation zone, looking for the buy up with cycles heading to the bottom. Doesn't have to trigger today. We'll be looking for stuff like this. Like this. Now, there are front run patterns to this, but overall, and let's see if that does work on the 1 hour to verify. Right there on the 1 hour, and this is completely valid on the 1 hour. So it would need a 1 hour close above 38 for a key trigger. And also that would be above yesterday's high, which would also, mind you, trigger a percent beat buy if it can get up there today. If it can't, it would have to be based off the double. In the euro, does this 1 to 4 hour double bottom get you temporarily out of the larger double top trade? Then I'll look at the natty euro. Where's my euro chart? There we go. Well, it just depends on what kind of entry you're looking for. This is just a minor pullback. No, it does not. This, if you're already in it, if you're already in the euro trade, no. Why would it not get me out of there? I'll give you a couple reasons. A, look at it. You're already in it. Or if you're not in it looking for a pullback or like a rally area, I'd be looking for some of these levels to possibly get in it at an even better reward to risk. But if you take a look at this double top pattern, look at this in the scheme of things. Does this do anything? Is it even beyond the invalidation point? So the invalidation point is all the way up here. Does look at the targets on that little mini double? It's a blip. It's not even, you know what else I talk about? For on pullback trades, watch between the trigger point and the candle bodies right before it. That doesn't even take you to that. So this wouldn't do anything. It's just a natural pullback so far. Because all your targets for that double are within still. It wouldn't even invalidate the bigger double top. So no, it would not. So the double's still in play on the euro. Natty gas near the 200 EMA on the weekly is strong resistance or potential breakout. Probably on the, just on the chart overall for natty gas. Natty gas, we could get a bounce up, but then I'd be looking for a stronger topping pattern coming in this area. A stronger topping pattern coming in this area. And this is just a weak, I'm just keeping an eye on this. It's a weak triggered topping head and shoulders, but I'm watching for rollover plays on rallies and natty gas. What else do we have? We have the yen. All right, we closed clearly above the trend line. Now I'm watching for pullback to kiss the trend line goodbye, and then rotations back up. So, going to keep an eye on that. I'll probably teach something else coming up soon, something new with the RSI, by the way, that I've used for years, but I'll probably start teaching that too. All right. Spiders. Spiders yesterday gapping up above the first target, which had already hit, and hitting the second target, nearly to the third target. Third target's off today. Nearly 576.02. We're trading 575.85. All right. So this double is probably going to get completed today. Next key area is back to 581.45. That's next key on the on the spiders. I'd be paying attention to the 1 hour rotation zone. The 1 hour on the spiders, 572.02 is key support. And then your next major support level is back at about 569.50. The Qs, the second target hit yesterday. Next target is 495.11. We're still off a ways from that, and that's very key. I'd actually move it just in front of that, about 495, 494.50 to 495, because we got the 200 right there. But that's what's key for me still to the upside. Same difference on this one, watching the 1 hour rotation zone. My support level is coming about 488, and then we're looking at 485.50. What was that other one? Bitcoin, not much to talk about there. Tesla did trigger the double, but it had to be traded intraday, and it's going to hit all the targets on the double. Next key area is the 200, and then your major area is coming in about just above. I'd really watch 300. There's some pretty key resistance right there. But again, Tesla's everything piles in it, and then everything runs out of it. All right. What was that other one you had, Sterling? Oh, boy. Why? MKC. First, MKC. MKC, a great-looking daily double top that confirmed, triggered, returning the candle bodies, now gapping down to the second target. So here's, if you used even the aggressive targets, which I would have used the conservative targets for this one, but it is gapping down to, below the second target. So there you go, another double that triggered. Again, this is why you don't want to get shaken out. Like, yeah, they don't all work out, but like, oh, man, it's rallying, it's going up to me. Should I get out? But look at this. This is what I talk about. Return to the area of between the trigger point and the candle bodies. Boom. And then the rollover play. Okay, that was McCormick, which I missed. It was a miss. So, again, is everyone going to work out? No. There's no perfection in trading. Good pullback opportunity. Add more I love MO. Love me some MO. It just depends where you're in it also. You know, weekly cycles are still headed down. Might be a little patient unless you're looking to build something up here because you do have a potential double top. That's confirmed. Okay? Where would that take me? Because this is why I would be really patient on this, because they'll get another rotation back in here. But look, MO, when it moves, it tends to pull back more. If I was starting to build a position, could you start to build one here and then look to continue to build it lower? Sure. All right, but when this thing starts to get some pressure against it, it generally tends to run a little longer. Now, MO for the longer term, we don't talk about a lot of fundamentals here, but P to E, 8.8. So even if earnings pull back in, your P to E is still a bargain, and your dividend yield is 7. Look for this. Can't give you trading advice. Where would I be looking? The rotation zone. Into the weekly rotation zone, at least. So thank you for pointing that out. Back into the weekly, yeah. I didn't even read your full statement. Sterling's going to start teaching. I didn't even read his thing. I just glanced at MO, and I'm like, all right, I know what's going on with that one. And then I read his stuff, and he did the same analysis I did. Back to the weekly rotation zone. Sterling's spot on with this. Sterling gets the gold star. He's really learned stuff very, very well. And looking how to put the multiple time frames together and everything else. So this, again, Sterling, I think you've come a long way, at least from my perspective, from when you first joined the channel. And you've really applied stuff and also made it your own. So congratulations. But that's a good way to analyze stuff. And this is also for longer term. I do look at fundamentals, especially dividend yield, and I don't want to pay up for no dividends and sky high P to E's, especially in this market. Evil corporation. I have some other evil corporations that step in front of this one. Again, if you don't want to trade it for other reasons, that's fine. But then find companies like this, not that do the same thing, but that have a decent PE and, a decent dividend. All right? Like what, again, another one I'm starting to keep an eye on, again, is GIS, General Mills. Broke out the upside, triggered a sloppy inverse head and shoulders, hit the first target of the 200 and pulling back, but it's potentially coming into some very, very long-term key support area. Major key support area. This is another one. PDE 12.8, so roughly 30, and a dividend yield of 4. Especially if this keeps dropping, this dividend yield keeps climbing, and this PDE keeps dropping, and it's coming into some major support. And their earnings, they did miss on revenue. That's why I'm being patient. But again, they'll be, like here was a percent B buy, right there. So those are the kind of things I'm looking for longer term on these. You don't have to worry about chasing. This big reversal candle, was a really nice buy pattern too. So I'm not recommending go out rush out to buy it today, but I'm watching for some kind of bottoming pattern on GIS. And I guess you could get mad at General Mills too for food additives, but you know what? You could probably get mad at most companies. You get mad at Apple for not innovating anything anymore. All right. So let's take a look at the S&P into the open. Little mini. Did that trigger? No, it didn't. It confirmed double top, not triggered. But would that invalidate looking for pullbacks? No, that's just, but I'd be looking for pullbacks now. Let's see where the tick opened. Again, not every day is going to be as strong a day as yesterday. Not a strong tick open. I mean, it's strong because it's plus 700, but not a strong tick opening. Not an incredibly strong tick opening. Yesterday's tick opening, look at that. Close to 1,200. Today's 600. So I'll be patient with this, watching for pullbacks and tick, watching for the markets to pull back, and then seeing if there's anything else. Keep coming back. I've learned everything from Mike on this channel. Go to the homepage of the channel and watch all the teaching videos, especially Mike's crazy classroom, which I haven't done in a while. I probably have to do another one of those. I'm just trying to teach more and more stuff live. And the best thing to do is repetition. Repetition. You're going to pick stuff up over time. Charles, good, great. Volume was light on that rally also. Good, thanks for pointing that out. So, that's where we sit. I really appreciate everyone tuning in. Again, share this information with family or friends who might be interested or want to learn. You don't have to be a day trader or anything else. I don't promote that at all. Why we do a lot of the analysis intraday or set up for day, because you can see it on shorter terms play out. But for stocks, what do I love? I love weekly patterns. Weekly patterns are the best thing for stocks you can learn. Okay? So if you can spot them on shorter term patterns, you can start spotting it on longer term stuff and then start applying it. All right, with that, I got to get this phone call. I will talk to everyone later. Bye for now.